Welcome back to the Crypto Alpha Network. Before we head into today's alpha, do us a huge favor by liking this video and clicking on the subscribe button. We'd love to hear from you, so don't forget to leave us your thoughts in the comments below. At the end of yesterday's post, we mentioned a new Bitcoin all-time high might hit within the next week. Well, we got it. And now all signs point to Bitcoin climbing much higher. But the bigger, more profit-taking question is whether altcoins will follow suit. Yesterday, we talked about the global debt and treasury bonds crisis that's unfolding, and things got worse after our post. A weak 20-year bond auction sent U.S. Treasury yields soaring. As this bond and debt crisis continues, Japan's 40-year bond yield just hit 3.63%, an all-time high. As a result of the weak bid, the U.S. stock markets took a hit. The S&P 500 and Nasdaq both dropped, with the S&P 500 closing 1.6% lower, its biggest daily drop since April 2021, due to worries over the rising U.S. Treasury yields. This chaos is likely to push people towards safer assets like housing, gold, silver, and Bitcoin short-term. And as the bond and yield situation worsens, countries might turn on the money printers to avoid bigger problems, which could send extra cash flowing into Bitcoin as well, especially for those with spare funds. Both scenarios lead to a potential Bitcoin price increase. We're already seeing global money supply, M2, increasing, and Bitcoin's tracking it closely. The M2 suggests a rough price target of around $140,000, $160,000 based on its current trend. But this isn't an exact science. As we've said before, nothing is guaranteed. FYI, M2 is a lagging indicator, which is why its line is ahead of Bitcoin on the chart. You need to offset it, and if you look before January 2024, it doesn't even line up perfectly, so take this with a grain of salt. But on top of the M2 showing a $140,000, $160,000 target, major moves in this bull cycle have given returns of 90%, 120%. If we project those returns from the current lows, we get a target of $142,000 based on 90% and a second target of $164,000 based on 120%. Eerie how both those points line up. Bitcoin's first price discovery phase is often followed by a correction, then a second price discovery phase. We've just entered that second phase. Overall, this next leg could see an August local top for Bitcoin that we spoke about recently based on the current M2 top and the 90-day tariff pauses. Lastly, speaking of safer assets, gold climbed to $3,339 per ounce, marking its fourth straight gain and hitting a near two-week high. Meanwhile, Senator Cynthia Lummis says Americans are ready to update U.S. gold reserves with Bitcoin. As we mentioned yesterday, a pullback is not off the table. Bitcoin is trading at its highest level ever and straight up probably would not be healthy. For now though, Bitcoin has surpassed both Amazon and Google to become the fifth largest asset in the world. Interestingly, retail investors don't seem to be here yet, as proven by the following facts. 1. Crypto apps ranking on the App Store in the US is steady at mid-levels 2. Google searches for Bitcoin is nowhere near their highs 3. Daily exchange volume is also not near all-time highs 4. BTC long-to-short ratio on Binance reveal more shorts than longs. All signs point to money flowing into Bitcoin, which is why we think there's still a long way up to go. However, nothing goes up in a straight line, so we expect a pullback soon. Charting something in price discovery is tough for technical analysts. But, based on the charts above, the next leg might ultimately see Bitcoin head toward $140,000, $160,000. Now the bigger question is whether altcoins will soon follow Bitcoin. Yesterday we mentioned that altcoins might lag a bit while Bitcoin does its thing, but the faster Bitcoin moves, the closer we get to a potential altcoin breakout, at least based on history, where cash flows from Bitcoin to major altcoins, then to smaller ones and so on. Or could this time be different? The truth is, altcoins are lagging a lot right now, but there's a fine line between lagging and this time being truly different. We need a bit more time to be sure. Looking at past events, altcoins often trailed Bitcoin by about a month, which we can see on the others versus Bitcoin chart. That same chart is also currently at a key spot where we've seen big bounces before. Plus, there's a weekly bullish divergence on the RSI for that chart. When Bitcoin had a similar bullish divergence at a bottom, it took off. Something similar could happen with others, BTC now. Two more thoughts to support the idea that altcoins might gain strength soon are: 1. USDT dominance is breaking down from a critical 7-year trend line. 2. Total 2 has historically outperformed strongly during USDT breakdowns, which might already be here. Bitcoin dominance is another big indicator people watch to predict an alt season. If Bitcoin's price is rising or stable but its dominance is dropping, it means money is flowing into the rest of crypto, aka altcoins. And right now, many see the breakdown already underway. There's nothing to say a rotation to altcoins isn't still coming. If you zoom out, as we've shown in charts over the past few issues, the long-term trends on charts like the 2-week time frame look similar to previous cycles and still seem promising. Based on that and all the data above, we could make an educated guess that an alt season is still possible, but it probably won't happen right after Bitcoin breaks its all-time high. It may just be lagging by a month. Maybe all our analysis is wrong and everything is just pumped because of Bitcoin Pizza Day. Who knows? Or maybe we trust the data to give us a better idea of what's coming next. The landscape still looks bullish. Go grab some pizza. Unless you're allergic or something, then don't. Enjoy the ride before the eventual bear market. Before you go, help us increase mass adoption and get the word out there by liking this video and clicking on that subscribe button. We'd love to hear from you, so don't forget to leave us your thoughts in the comments below. Bye for now.